Jack in the Box shares down 5% today's session. The company, which operates franchises, Jack in the Box, or brands, I should say, Jack in the Box and Del Taco, plans to spend more this year as it moves to become a more heavily franchised asset-light company. Joining us now in an exclusive interview, Jack in the Box CEO Darin Harris. Darin, it's so great to have you on. There's so much to get to. I am going to start with this refranchising push that has been afoot and that you've been employing pretty aggressively, and it looks like it continues. What is the financial, argument for why it's so needed and so compelling for the company now?
Yeah, I think it's all about growth. So for us, it's about becoming an asset-light model where we sell locations to franchisees who have a desire to build and invest capital for future growth. So for us, it's a model that we think over the next 3 years we can get to a very 90% or plus franchise model, and enables us to continue to with our growth strategy.
So in terms of, and of course you're joining us from ICR down in Orlando, you updated investors today as well. What are you seeing in terms of consumer appetite, pardon the pun, at Jack in the Box and Del Taco, and how does it speak to how you would assess the health of the consumer right now?
Yeah, I think overall what we're seeing is a consumer who, if they find the right offer at the right time, are willing to come to our restaurants. And we're in a very competitive marketplace in QSR. And so, for us recently, we're excited about a recent rollout of our Smash Jack. We call it the best burger in QSR, and we've got a claim to that. And we're seeing consumers being willing to pay for a really premium product and something that's differentiated in the market. So I think it's all about a very resilient consumer who is looking for the right offer at the right time. And we've been trying to focus on Jack in the Box meeting their needs. What
about your costs and wages, especially in California with the minimum wage going up? How is that affecting your business?
Yeah, I think overall what we've seen is inflation normalize. And we continue to be within our guide that we've guided the street between 1% to 3% in overall inflation. We are facing AB 1228 in California, where it'll definitely have a wage increase, and we've focused on how do we mitigate costs, but also how do we take price to make sure that we can manage the business effectively.
So that's the labor piece of it. I'm curious about the food inflation piece of it. In a week where we're awaiting the latest CPI report on Thursday, we have started to see food prices, or the increases in food prices, slow down. Is that what you're seeing within your own cost structure? And how do you expect that trajectory to play out this year?
Yeah, as I mentioned, we're meeting within our guide of 1% to 3%. And so we have seen some costs come down from related to food inflation.